So dig into the third quarter for me, because the numbers are an uplift of profit by 55%. I'm noticing costs are cut as well. Are we at the end of the cost-cutting cycle in this part of the journey?
So, for third quarter results, EBITDA, profit up 42%. As you said, net profit up 55%. So, a strong set of results, really focused on the areas. In terms of costs, this is about cost efficiency. This is about being fit to grow. And we've looked at our cost through our operational cost, but also our capital expenditure. I think there's plenty of space to go in that. I think we can become a more and more efficient company, and we can do that and become a bigger company at the same time. So, I think it's a mixture of the two.
John, it's Tracy Alloway here in Hong Kong. It's so nice to see you again. A couple months before I left Abu Dhabi, you introduced a charge for premium service on gas refueling. I'm not saying the two events were related, but you did do that. How's that going, and is it boosting your bottom line? Can we see that coming through in the numbers?
So it certainly wasn't related, I promise you, Tracy. But yes, it's coming through in our numbers in the third quarter. We launched it, but it was about giving our customers choices. I think if we look at our business model going forward, what we need to do is be effective and be efficient and give our customers what they value. And good quality customer service, flexibility, self-service, as well as premium service. And within our premium service, we've linked it very closely to our convenience stores and our rewards. So we've had a very strong penetration. We've had up to 20% penetration of that premium service within Abu Dhabi. We've launched it across the region. It gives us a lot of opportunity and flexibility for the future. And it gives our customers, I hope, a confidence that we are going to be an effective and efficient company. We do not want to pass on our inefficiencies to our customers.
Where is the next growth stage? You say, I want to be an efficient company and I want to grow. I look at the three pillars of ADNOC Distribution, which is fuel distribution, convenience and retail. Where's the lubricants business for you? Is that the next significant growth part of the business?
So I think the lubricants business is a key growth area for us. There is no question. I come from a lubricants history. I used to work in lubricants. I think it's a great business. And I think the ADNOC brand has a very strong position in the UAE, but I think what lubricants and the ADNOC brand does in terms of growth, it allows us to become more regional and global. I think our lubricants business certainly has an international element to it that we want to grow and acquire further growth through there. But I think also in terms of our growth, a fuels business we talked about, and Tracy talked about, the ADNOC Flex, etc. But our non-fuel business has shown significant growth, over 8% growth in the third quarter, year on year.
Right.
Our convenience stores, our relationship with Giant, our better category management. We brought in new capability there. Our customers are saying we like what we see.
John, Manus just asked you about the future, about future growth. What are you doing in terms of geographical expansion? Because it feels like we've been talking about Saudi Arabia, for instance, for a long time. What's the progress there? Have you found a partner? How many stores are you planning on opening up?
So we are opening stores this year. We will open at least one. We will maybe open another one, but before the end of the year, so that's very imminent. But we have a number of conversations on, and as we know, going into a new market, one has to show a level of humility and recognition that that market isn't the same as your home market. We have a number of conversations going on, and I know this people may feel a bit frustrated that we're not announcing, but we've delivered very strong cash flow. My commitment to everybody is we will be responsible with that cash, but we will use it to grow. We have a number of conversations, not just within Saudi Arabia. There is a lot of opportunities going. I think the ADNOC brand and what we have delivered so far around efficiency, but also around the offer in fuel and non-fuel, has opened up a lot more conversations than we were having 6 months ago.
Geographically, where have you opened those? You can't tempt us like you used the word global, and you said we're opening up more conversations. So is it within my near geography borders that you're having more conversations? Is it GCC conversations that you're having?
So you really know I'm not going to answer that question directly, Manus. I know that even looking at you. But where we're looking is where the ADNOC brand can make an impact, where we can bring advantage. I'm not going to go into markets where we don't add value. We need to add more value than the competitors in those markets. Those are the conversations we're having. And where we can find the right partners, we're having great conversations. I promise I'll come back and talk to you.
You have to come back, Tracy.
You will be the first to know, Manus.
Tracy, go on, give it a go.
Yeah, Manus and I are going to start taking bets on where the next geographical expansion is. Well,
do.
I want to ask you about the oil price. This is a running theme in our show this week. How is that impacting your business? Because on the one hand, Abu Dhabi's economy, the UAE's economy is still very much tied to the oil price. But on the other hand, customers might be pumping more gas at cheaper prices.
Absolutely. I think that is, for us, the great kind of balance. You know, from a business perspective, we have fixed margins, absolute margins that are fixed. So, you know, as the oil price goes up and down, it doesn't impact significantly our margin. There may be a little bit of inventory gain or loss as we go, but that's in the roundings. What we see is, for us, truthfully, as a business, lower oil prices mean lower pump prices, mean more fuel. I mean, that's the benefit for us. I think from an Abu Dhabi perspective, we know high oil prices are good for the region. So there is a balance there. But from an ADNOC Distribution perspective, certainly, you know, it will be good for our customers, I think, as the prices maybe ease a little bit. But, you know, in terms of the choice we give a choice in terms of our product range from 91 to 98, which is unique in this market. And we obviously now with Flex give a choice as well.